So the next part of this training series is number 6, the tools / indicators for possible levels of price to move to. So all these levels that I'm going to show you, they are not magnets. They are areas where the average price action was at. So because that's the average of the price action, then you have a pretty good chance that the price may come back to the average of the price level. So with that being said, let's go ahead and take this one off. Let's go ahead and put on our tools that we like to use. For me, I like to use moving averages, and I like to use the simple moving average or a smooth moving average. You can just type in either multi-moving averages, and you can find a whole bunch of indicators that have a lot of different moving averages in one indicator. Some have 3, some have 5, some have more. Some have EMA's, exponential moving average, which moves faster. I don't like that because it moves too fast. And in my opinion, it's like having a lower time frame. The faster it moves, the more fake outs it might provide, higher chance that it will provide it. And I like the simple moving average. And for me personally, I use the 5 SMA. And on this one, let me bring it back up here. There's several of them that I have. So you just type in 5 SMAs or whatever you want, and they'll have them for you. I do have my whites, my red, my orange, and my yellow. So for my first one, it's my 9 SMA, my 50 SMA, my 30 SMA. I only use this one when I'm scalping, so I'll take that one off. Then my 200. 9, 50, 200. Again, I don't like my charts messy. Then we'll come down here to defaults, and you can save it to your defaults. These are the colors that I use. And I always have this off because this annoys me. There we go. Again, clean. So now we're going to say, okay, what does this show us? This shows us the possible areas that the price action might return to. Now, the moving average, it is an average of the candle body closes on the time frame you're on. Right now, we're on the 3-day time frame. This is the 9 SMA on the 3-day. Let's go over here to the daily time frame, and it's different. Now, with this is saying that when the price action moves away from, let's say, the red line, which is our 50 SMA, when the price action moves away from this is saying that if price comes back to it, or the moving average goes up to the price, because again, this follows the price, and the price action crosses below it, this is saying price isn't so healthy right now. It's not very strong. If it breaks below your lower moving average, in this case, it's the 9, others may have the 21, but I do have the 9. If it breaks below this, then the next level it might go to would be the 50 SMA. And hopefully it averages on the level of this. Doesn't mean that it has to. It could break below it and continue going down for the next level. And every time it loses a level, it's losing strength. It's losing momentum. So for me, this is a strength indicator. If price moves away from the moving average, it can continue going up until it's ready to come down. The moving average follows it, and the average candle closes is right here. So you may say that it's finding support, and at the moment it is. Price comes up, continues finding support. It finally breaks it because it's coming down to retrace, hopefully 38%. Then it goes above it after the bounce, breaks above the 9 SMA, broke below it. Okay, if it stays below it, we may go after the 50 SMA. And this is just saying that it's losing its strength. So this shows an area of possible levels the price action might go to and potentially will go to if we lose one level, we lose another level. Now it looks like it's going for this level, comes up, doesn't have to go there right away, losing strength, losing momentum. These things are just crossing, and then it comes down, it loses this. Now this is the average of the candle body closes. Price can do and will do whatever it wants. We are at the mercy of price action. Price is coming down, and then does it come up, keeps on coming down to the 200, does not find support on the 200. We were hoping that it would, because this is the average of candle body closes on the daily. It broke below it. We don't want to see that. Starts going, and now this is underneath the average of the 200, which is showing a lot of weakness. Then first thing it needs to do, price action needs to cross the 200, then the 50, then the 9, in order for us to reestablish our strength. So once again, these levels are not magnets. They are levels of averages. Price action may go to those levels. And here we can see price action was here, finally broke up. The 50 SMA was not a rejection level or resistance. It's a level of possible average where we might have stayed here for a little bit. Instead, we broke right through it. Didn't even look back. Broke right through it. Then we retraced, hopefully around 38%. Then we came up to this. This acted as resistance barely. Then as support barely. Then as resistance barely. Again, average. Then above, then below, then above. Now it's acting as support. And then above it again, and now it's gaining support on the 9 SMA, then it loses it. Find support on the 200, and then it loses it. Find support on the 50, and then it loses it. And then, so again, this is extremely important. Most people think these are magnets and these are levels of support resistance. In a sense, they are a level of support resistance, but I treat moving averages on a scale from 1 to 10, 10 being the strongest. I consider this to be a 4. 4 on the strength level. Sometimes it works, sometimes it doesn't. So this is an average area. Now, another thing that we want to show is tools, indicators for possible levels of price moving to is the point of control. Now, I like doing this. There's several different ways of doing this. I like doing this 2 different ways. One is a pivot and one is the range. So I used to use the range a long time ago, but then I started falling in love with the pivots. And we'll go over both in just a moment. And this is also subjective. There's so many different things in this space that is subjective. So there's a few different areas that I could do this from. And I'm going to use the fixed range volume profile to find my point of control. Now, there's a few different ways. One is I could use the lowest point of the range, or of the move rather. I could do this point, which would be the range, and then we could go on a lower spot and get the range of the whole entire move up. Now, what I want to do is I want to go and see what the fixed range volume profile says from this move right here, from this pivot, which started the move. So I'm going to go to the fixed range volume profile. It is located over here. Fixed range volume profile, and we're going to click on the pivot all the way over, and it shows that my point of control is way up here. Now what I'm going to do is I'm going to do my fixed range volume profile, and I'm going to start from this range, this right here, and go here to here, and it's pretty much dead on the same spot. So this is telling me that there is a lot of volume, which we can see in these different colors here. Now for this settings, these are my settings. Shift, the Windows key, the letter S will show you how to do the screenshot. Your screen will turn dim. You click and you drag. It'll save it to your clipboard. You can paste it to your notes or your documents or wherever you're putting it at. These are my inputs, 250 for the row size and 70 for my value area, which would be the up and the down. And these are my colors. And then these other levels, I have them gray and a lighter gray. So just give you a heads up on that. I have these labeled as well. And then I have it saved. You can save it as a template. So I'm gonna say okay. Now these are pretty much the same. Right now, this is saying that we are underneath the point of control. Again, this is saying where the price might go to. Now, I always look at this as a health meter. Is the price action strong at the moment, or is it weak? For me, this is weak. This is weak because the price action is underneath the average, or where there was the most activity of buying and selling. Now, these are called volume nodes. This is called a low volume node. That just means there was a little bit of volume here. This was the peak, the absolute highest point, which gave us the point of control. And then we have peaks and valleys. So here it's a level. Now, if you wanted to, you could also do levels like this to where it would be your zones of volume. For me, I don't do this. Again, I like having my charts very clean, but this is what you can do. And just know that these are areas where this was low volume, a peak of volume, and then the most volume. And you can also make this a zone as well. So this is an area where the price might go to, just because the majority of the volume was right here. That's what this shows me. Now we do have another, let's go and just delete this. We do have another area that we can do, and the same pretty much scenario where we could use this is the anchored VWAP. Now the anchored VWAP is the volume average. I can go from this pivot and it automatically does the line for me. I can go from, let's say this up here, which is our peak. Let's go up here. This is our peak, and I can do the same thing, but I would like to get this whole range. So I'll do it from here. So this is the whole range. This is the average volume. And then let's do one more, because I kind of treat this like a Bollinger Band. And what I want to do is from the very beginning of the move, very beginning, which would be way down here. This was some time ago. Now what this is doing, it's giving me kind of like a Bollinger Band effect. I have a low, I have a high, I have a mid. Now what I want to do is I want to go and just kind of see where I'm at. For the immediate price action, I'm doing okay. I'm not underneath the VWAP, not underneath it. I'm underneath the point of control, but I'm not underneath this. Now, if I was underneath the point of control and the VWAP, now it's looking really, really weak. The first indicator for me to think that the price might be reversing is if we break above our VWAP and our point of control. And then of course our levels, our trend lines, and then everything just adds on each other. Everything that I say is from experience. This is what's going to save you so much time, so much money, and so much effort. I have videos that are 3, 4, 5 minutes long on average. If you want to make money, I will show you how. I would strongly recommend getting the VIP. You're going to make money. Now, granted, none of this is financial advice. It's never hopes and dreams and empty promises, nothing like that. See what I do. See if this makes you money. I give you my real life experience based off of my trainings, based off of my teachings, what I would do at that moment versus what everybody else does, because they want to sell you their course. They want to sell you all that stuff. I show you that my stuff works. Do we win? Yes. Do we lose? Sometimes. That's part of the game. But what I do is I show you all this so that you can see, oh man, I lost today, but Joe said he lost too. So it's okay. That's what I want you to realize, guys. If you like the content that I provide, make sure to smash the like button, subscribe to the channel if you're not already, and leave me a comment in the comment box. And I'll see you on the next video. And as always, let's make this money.